This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You are watching News 9. I'm Karthik Malhotra, and big news coming in this morning from Bandipora. We will bring you those visuals that News 9 has access to, as well as bring you the latest from the clash between Jammu and Kashmir security forces in the manhunt for Asif Sheikh. Well, also on the show, we will discuss why Pakistan's economy continues to be in shambles, while India is the fastest growing major economy in the world. A comparison between the two neighbors. Also on the show, we will bring you why the stocks in Pakistan are down, and is there any hope of revival in the fragile economy of Pakistan? All that and more, you are watching Morning Brief at 9. This is Morning Brief at 9. First up, let's also bring you all the other headlines that we're tracking for you this Friday morning. India has officially notified that it is holding the Indus Water Treaty in abeyance. Clashes on the line of control. The Indian Army effectively responds to Pakistan's firing at LOC. The Indian Air Force has conducted an exercise AAKRAMAN, with Sukhoi 30s and Rafales. And in getting ready for any action that may be required, the Indian Navy also test fires surface-to-air missiles from INS-SURAT. Meanwhile, Pakistan has shut its airspace for India-bound and India-originating flights. Flights to now take longer routes. And Pakistan stocks continue to tumble on border heat. Meanwhile, US stocks extend their rally. The green spell on Wall Street continues. US Treasury Secretary Scott Bessent says India likely to be the first country in the world to sign a trade deal with the United States. And finally, the Enforcement Directorate conducts search on GENSOL facilities. PUNEET Singh JAGGI has been detained by the ED, while Anmol Singh JAGGI is reportedly in Dubai. Let's start with the top story that is coming in this morning. A house belonging to terrorist Asif Sheikh was badly damaged in a blast during a search operation carried out by security forces in a village in South Kashmir's Tral. Police sources told that during the cordon and search operation, some suspicious objects were notified by the security forces. Sensing political danger, the forces swiftly pulled back to ensure safety. Now, shortly after the retraction, a powerful blast occurred, causing severe damage to the house. Preliminary inputs suggest that presence of some explosive material inside the premises was found. Further investigation is underway. I have Deepak Batana joining me this morning. Deepak, good morning. What is the latest that we know in India's manhunt for Asif Sheikh?
Good morning, Karthik. See, the Indian security establishment has gone all out in their search for these terrorists who are behind the bloodbath in Baisaran. Now, presently, two names surfaced. One was Asif Sheikh, who's an LET operative, and another is Adil Thakur of Bijbera area. Now, it was established that these people had a very important role to play in the Baisara massacre. Consequently, the forces will also reach their homes to conduct a cordon and search operation. But we must understand that every time the forces go into a neighborhood or a home, there is a very high likelihood of, retaliatory fire or explosives, some sort of a booby trap, which ends up costing the precious lives of our soldiers. So presently what we've started doing as a protocol is that warnings are issued for people to vacate the property, or for anybody who may be a suspect to come out. And should they not follow this, the home is usually razed to the ground. This is in line with the policy that we've followed for some times, and it's tried and tested in the fact of the matter that it does not cause losses to our soldiers who are putting their lives on the line every day. So these two homes, there were reports that there was some explosive material inside, and if that's true, we can almost be assured that there must be also some sort of ammunition and arms which are stored for the long term in these places. So presently, 2 homes were identified. The army is completely, it's pulled out all the stops. You may recall that there was an encounter in Bandipora as well.
Right.
In that case, there was a specific intel, and when the forces reached for a cordon and search operation, they received fire, after which they retaliated, and 2 soldiers unfortunately lost their lives. So this is still a developing story. There's a lot of things that are happening on the ground, and News9 is keeping its ears to the very grassroots to bring you the latest updates.
Deepak Badana, thank you so much with that input early morning today. Well, moving on now, Pakistan's economy is dying a slow and painful death. Its inflation rate is close to 30% and external debt runs hundreds of billions of dollars. Private employment in the country is a joke, and foreign investors don't want to touch it with a barge pole. Now, India, on the other hand, is the fastest growing major economy in the world, already the 5th largest. India is racing to get to the number 3 spot before the end of the decade. It is the darling of FDIs, and stock markets have been on a roll. Now, nothing new here, but when you look at the numbers which are flashing on your screen right now, you understand just how stark the difference between India and Pakistan is. Let's take it from the top. Let's look at the GDP numbers first. India's GDP is close to $3.7 trillion, likely to close the year at $4 trillion. Compare that with Pakistan, it is less than 1/10 of India's economy at just about $340 billion. Compare 3.7 trillion with 340 billion. That is the difference. Now look at the growth rate between the two economies, the two neighbors. India has been growing at a staggering 6.5% annualized growth rate. Compare this to Pakistan's 2% growth rate on a much smaller size of the economy. It tells you volumes. Now look at the foreign reserves, the holding of central banks in case of any contingency, any emergency. These are dollar value holdings that central banks both in India and Pakistan hold. India has got foreign exchange of more than $700 billion. Compare this to just about $8 billion that Pakistan holds in its central bank. Now, what happens to the lives of people? Inflation is something which has been eating into Pakistani citizens and nationals at 25% compared to less than 4% as the inflation rate for India. Now, no surprise, Pakistan lives on debt. Pakistan cannot sustain without external aid. And look at the debt to GDP ratio between Pakistan and India. India enjoying a debt to GDP ratio of under 20%. Pakistan, on the other hand, is as high as over 65%. And finally, we are discussing potential escalation between India and Pakistan. And look at the military budget allocation in both the countries. India is 10 times more equipped to go ahead and buy arms and ammunition as compared to Pakistan, with a budgetary allocation in India at $78.7 billion versus just about $7.6 billion in the case of Pakistan. Mithali Nikore, founder and chief economist, Nikore Associates, joins me this morning. Mithali, good morning. No comparison. People say this could be a war on economy, an economic war, but look at the numbers that we were just flashing on the screen. There is no comparison on the economic front between India and Pakistan.
No, Karthik, I don't think we can even compare or even think about comparing these countries. Actually, just as you were talking about the full-fledged GDP numbers and the debt to GDP ratio, I started looking at one statistic that we do often use to compare economies which are of such different sizes, which is the per capita income, right? Because the per capita income is an average number, and it shows us, how is the GDP divided between the population. And it's very interesting that in the 1960s and 1970s, the per capita income in India and Pakistan was actually very comparable. Not the overall size of the economy, but the per capita. And today, India's per capita income is 2,500 US dollars, whereas Pakistan's per capita income is 1,300 US dollars. So it's not only that India is a bigger economy overall, but also that, by per capita rate, like on average, despite the fact that we have nearly 1.4 billion, population, our per capita income is nearly double of Pakistan. So really, we really cannot compare the countries anymore.
Absolutely. What is it? Where is it that Pakistan has gone so badly wrong over the last 20 years or so, Mithali? I think, is it the focus of just making sure that the army continues to own every business, control every inch of land? Is that something which has led to this overall degeneration of Pakistan? And is there any hope of the poor country ever coming out of it?
So, Karthik, it's a very, very clear case of what we call an economics resource curse. It's not like Pakistan is not blessed with good natural resources or, very good ports, for example. The Karachi port and, the Karachi port is a very important port in the overall international shipping industry. So, it's not like they don't have, the similar engines of growth that even India enjoys, in some cases, or even Bangladesh enjoys. But the one the one difference between countries which are doing well and countries which don't do well in development economics, we always call it the institutional leadership and the country's political leadership.
Right.
So in the last 20 years, we've seen that, Pakistan has had leaders and, there's a lot of corruption, and there has not been that much of a focus on broad-based development as opposed to, as you rightly said, exploitative, regimes coming in.
Right. So had the army not been in charge in Pakistan, had a real democracy, not a flawed democracy, continued to be in Pakistan, do you think Pakistanis would have been much happier citizens today?
See, Karthik, I wouldn't even say it's about the army or the democracy. It's just about even in an army regime, right? Or even in a flawed democracy. I mean, we can look at the People's Republic of China and say, is that a full-fledged democracy? Of course not, right? So it's not that, these regimes are not conducive to economic growth, but the decisions that have been taken in Pakistan have always been around just exploiting the resources for the benefit of a few, and there has not been a focus on broad-based development, on, developing, for example, more and more cities, on investing in urban infrastructure, on investing in transport and connectivity. And, we really need to see regimes which actually prioritize the well-being of the people. And, here it has not been like that. Here it's been like a situation where the rich are getting richer, the poor are getting poorer, but nobody's questioning that layout. So even in an army regime or even in an authoritarian regime, as long as the authoritarian regime says, no, we are going to bring out policies for the benefit of the people, you can see growth. But here, that was never actually done.
And I think I want to keep coming back to this, Mithali, and I feel and I seem to believe that the singular force behind this corruption, behind this political upheaval, and behind not caring for the citizens is the authoritarian regime, which is not even publicly stating that it is running the government, but it is running puppet government after puppet government. The fact is, where is the money in Pakistan? Pakistan continues to go to multinational financial institutions and rich countries with begging bowls year after year, quarter after quarter, because it's just unable to sustain its own day-to-day expenses, leave alone investing in infrastructure that you're talking about.
Absolutely, Karthik. And I'm also very surprised by this because, if you remember a few years ago, there was an economic crisis in a country like Greece, right? And the Eurozone countries actually gave Greece a bailout package, but that bailout package was accompanied by a number of very stringent conditions. And the fact was that Greece had to cut down a lot of its fiscal spending in order to access that bailout package. However, in the case of Pakistan, we've observed that, the IMF has provided provided successive bailout packages over the history of the country, over the economic history of the country. But the conditions which are often coming in these bailout packages are not being fully implemented, and yet they continue to access these bailouts. So I think at the end of the day, somebody has to hold the financial authorities, the economic affairs ministry, the revenue departments in Pakistan responsible and ask, why is it that these bailout conditions are not being met? And yet they are continuing to, access these bailouts.
Absolutely. So for a country which is practically on the verge of bankruptcy, if not technically bankrupt already, the simple question that I think a lot of Indians and a lot of Pakistanis would be grappling with right now, Mithali, would be that if the two countries decide that escalation takes a military turn, can the Pakistani economy even afford a military skirmish, leave alone a war with India?
No, I mean, the war, a short war, of course, any country is prepared to be able to send their troops into war. And as we've seen, the Pakistani army is only one part of their defense apparatus. They have a number of other, sort of modus operandi when it comes to defense. And of course, I'm not an expert there, so I can't comment. But having said that, when we talk about the, sustainability of the economy, it will put immense pressure on both economies to go into war. And but at the same time, of course, India being a diversified economy, a larger country, just having the pressure, having the support of international organizations and having the support of countries like the US as well as Russia going into this makes India, of course, very, very ready to sustain a longer term defense campaign.
All right. I want to specifically talk to you, Mithali, about the forex reserves, and that is something that comes in handy every time there is an emergency. And it seems like Pakistan is definitely on the brink of emergency. Now, in case there was to be further defense escalation, military escalation, forex reserves in Pakistan are under $8 billion. Compare that to India's almost $700 billion in forex reserves. What does this tell you? The country doesn't have enough emergency reserves to go ahead and even feed its people, leave alone fighting a war.
Yeah, and absolutely, Karthik. And this again comes back to our entire discussion around caring for your own population, right? At the end of the day, when we look at the history of Pakistan and the way Pakistan has been governed, because there hasn't been a focus on poverty reduction, because there hasn't been a focus on reducing income inequalities, the decisions of whether to go into war or not are taken by the highest and the richest people of the country and the ones who control all the assets. And then they are sending, a largely impoverished population into war. And that sort of creates a situation where the poor population becomes dependent on the defense services and becomes dependent on that money coming in. So in a way, they are sustaining their defense campaign on poverty. And that makes it very hard, of course, for any country to sustain. But this is the current situation in Pakistan.
Absolutely. Well, let's leave it at that for now. Mithali Nikore, always a pleasure having you here on News9. Thank you so much for joining us with your inputs this morning.
Thank you.
Moving on now, international flights, especially from Delhi and other northern cities, will take a longer time to reach their destinations in the US and parts of Europe. Also, fares are likely to rise in the range of 8 to 12% in the near term. All this coming on account of Pakistan closing its airspace for India-bound and India-originating airlines. Air India and Indigo yesterday said some of its international routes have been impacted by Pakistan airspace closure, with the Tata Group-owned airline mentioning that its flights connecting North America, UK, Europe and Middle East are likely to take an alternative extended route. Now, all westbound flights flying from North Indian cities, including New Delhi, will be impacted due to this closure. These flights will have to take alternative routes that will be longer over the Arabian Sea, and this according to some senior airline officials as well as pilots. With longer routes, airlines will need more fuel to operate the flights, resulting in higher costs as well as deal with payload issues. Now, amid escalating tensions between India and Pakistan, obviously all owing to the Pahalgam terror attack, Pakistan on Thursday said it will bar Indian airlines from using its airspace. The airspace cannot be used by Indian registered aircraft as well as planes owned or leased by Indian operators. Now, in a post on X, Air India said that due to the announcement and the announced restriction of Pakistan airspace for all Indian airlines, it is expected that some Air India flights to or from North America, UK, Europe and Middle East will take alternative extended routes. Not just here in India, even Indigo has gone ahead and said that due to the sudden announcement of airspace closure by Pakistan, a few of its own international flights are also getting impacted. Now, duration of some of the US and European flights operated by Indian airline operators will increase in the range of 2 to 2.5 hours per flight. According to senior airline officials, again, Pakistan airspace is a crucial airspace in the region and is vastly used by the Indian airline sector. Aircrafts take longer routes, which means they will be burning more fuel, resulting in potential increased operational costs for the airlines, and increased operational costs with payload restrictions is not financially viable for airlines which already operate on wafer-thin margins. Now, as airlines will not be able to have higher load factors or more passengers in the aircraft operating international flights due to the external constraints, airfares are now likely to sail northwards. Now, remember earlier also, Pakistan had barred Indian airlines from using its airspace in February 2019. Indian Air Force conducted airstrikes in Balakot, Pakistan after the Pulwama terror attack. Following the airstrikes on Balakot, Pakistan had closed its airspace for Indian airlines for a few months. And moving away now, the Enforcement Directorate yesterday conducted searches against beleaguered GENSOL Engineering Limited and detained its co-promoter Puneet Singh Jaggi from a Delhi hotel. This as per official sources. Now, the raids were conducted at the company's premises in Delhi, Gurugram and Ahmedabad under the provisions of the Foreign Exchange Management Act. The promoter brothers of the company, Anmol Singh Jaggi and Puneet Singh Jaggi, are under the scanner on the Federal Probe Agency following a SEBI report against them for alleged financial misconduct, corporate misgovernance and diversion of funds. Jaggi brothers' other company, Blue Smart Mobility, that ran cabs under the brand name Blue Smart, halted bookings since the SEBI report surfaced last week. Reportedly, Puneet Singh Jaggi was detained by the ED from a Delhi hotel, while Anmol Singh Jaggi is slated to be in Dubai. The wives of the two brothers have been traced to Pune in Maharashtra, even as the ED officials visited their homes located in the Camellias DLF, Gurugram, apart from a location in Ahmedabad. The Federal Probe Agency will soon file a criminal case of money laundering against the promoters once the Delhi Police's Economic Offences Wing files an FIR in the case based on the complaint filed by creditors IREDA and Power Finance Corporation. Well, time for a short break now, but coming up on the other side, Indian markets are looking like they will have a green start, but that doesn't seem to be the case with the Pakistan Stock Exchange. We will try and get you a comparison on India and the Pakistani stock markets. You're watching Morning Brief at 9.
Expert living. I need my carrier.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया.
News9 Corporate Badminton Championships in collaboration with Pullela Gopichand Badminton Foundation is here for all of you to experience the passion and network. This is a great opportunity to experience your childhood memories and also be part of a corporate event which enhances sportsman spirit in all of us. Wishing you all the best and hope to see you here.
Presenting sponsor, Srinidhi University. Kindle the light within. Venue partner, Pullela Gopichand Badminton Academy, Hyderabad.
You have donned many hats: screenplay writer, director, producer, the whole skill and run.
I am a speck and I am not even a blink in time. Your identity is always sort of defined by the men in your life.
The crux of this imbalance is the financial independence, that disparity in financial independence.
I think marriage needs redefinition. You change your name, not just your last name. Women used to change their name.
Would you ever sit back and think, am I on a springboard Am I ready to take the next big leap?
Work doesn't entirely define me. I mean, different days I'm the first and different days I'm the latter. If you're not doing the next big thing, then are you even relevant at all?
Watch Radico Presents Duologue with Barun Das, Season 3, featuring Kiran Rao at these times on News 9. News 9, English news as it should be.
Welcome back. You're watching Morning Brief at 9. Let's get you a mood check of the Indian stock markets as they open just about 10 minutes back or so in early trade. Just 5 minutes into opening, Sensex and Nifty both registering handsome gains again this morning. Remember, yesterday was a very choppy session with the Sensex going up, down like a seesaw. It was flirting with the 80,000 levels, sometimes exceeding it, but closed the day under that 80,000 psychological mark. That is on the Sensex. The Nifty 50, meanwhile, continues to be comfortably above the 24,000 levels, and that streak continues even on the last day of trading of this week, this Friday morning. If you look at the numbers on your charts right now, Nifty 50 is up almost 0.4% in trade this morning, now comfortably above the 24,300 odd levels, while the Sensex at 9:20 a.m. today was absolutely on point at 80,000. This is a recovery from yesterday's closing price, where the Sensex had in fact closed more than 200 points down in the red. Remember, yesterday we still were breaking that jinx of the 7 days of winning streak after 7 consecutive days of Sensex and Nifty closing in the green. Yesterday seemed to be a break on account of potentially 2 factors. One, profit taking by investors who had been waiting for the psychological levels to be met. And in addition to that, the escalation, the potential escalation diplomatically, which we have seen, and anticipated military escalation between India and Pakistan, keeping the fear index in the stock markets edging up. This morning, India VIX seems to be a little bit in the cooler territory, down to about 16 odd levels. Yesterday, the India VIX was up at some point around 4% or so in 17 levels. Let's look at the Nifty 50 heat map and quickly try and make sense of which are the sectors which are gaining some momentum this morning. And that gain seems to come as a direct impact of what happened in Wall Street yesterday as tech stocks rallied. The Indian IT story is leading the charge this morning, taking Sensex and Nifty in the green territory. TCS is up about 2%, Infosys up about 2%. Similar sentiment coming in from HCL Tech and Wipro, both in excess of 1% of healthy gains this morning. Meanwhile, the banking sector seems to be a little weak this morning. HDFC Bank, ICICI Bank, SBI being fairly badly hit, and other sectors more or less flat. Not too much action on your screen, but it seems to be a day for the IT sector. Well, we have with us Kranti Bhatini now joining us to make sense of what is happening in the markets. Kranti, good morning. Yesterday we thought the markets would be a little softer on us, but that wasn't really the case. Markets closed in the red yesterday. This morning, some healthy gains coming primarily on account of the IT sector. Is this the US Wall Street knock-on effect that we are seeing in trade this morning?
Yeah, Karthik. Some kind of impact is there, and Indian market has been going up 7 consecutive days. It's a vertical up move what we witnessed. So some kind of profit booking, okay, some kind of geopolitical tensions also worrying on the market. So medium to short term traders tend to take some profit from the table at this point of time. And market has risen from a level of 22,000. From there to we are way above at 23,000 at this point of time. So some kind of profit booking tend to be warranted at this point of time.
Yeah, that seems to be definitely one of the sentiments driving, and of course choppiness yesterday again on account of a few factors. The potential escalation between India and Pakistan was something that was keeping markets on the edge yesterday. This morning that doesn't really seem to be the case so far, but of course these are just 10-12 minutes into market open. We will see how the day goes, but I want to draw your attention, our viewers as well as Kranti, I want to draw your attention to some of the data that we have collated on comparing India's stock exchange with that of Pakistan's. So look at the numbers on your screen, and these are fairly telling. Over the last 10 years, and that is the data that we've looked at, over the last 10 years, absolute returns that Indian investors have got from the markets is in the range of 150 to 180%. Compare that with just about 35 to 50% in the case of Pakistan. There's a lot more data, and let's look at that data as well. The annualized average returns for Indian equity investors, and this we've looked at data across Nifty 50 as well as Sensex. The average returns in the last 10-year period for retail investors has been to the tune of 11 to 13% compared to just about 4% to 6% in the case of the wealth that has been, or the returns that have been returned to Pakistani investors on the Pakistan Stock Exchange. Then, of course, the mammoth size of the Indian market. The Indian market is at a very, very conservative level, more than a $4 trillion worth market. Compare this to just about $100 billion or so in the case of Pakistan. Now remember, at one point, Kranti, you might be able to correct me if I'm wrong, at one point in September when we were witnessing the highs in the markets, the Indian stock market had actually reached a valuation of 5 trillion. And then, of course, there was some correction that was taken. Look at the volatility. India has, over the last 10 years, been a moderately volatile stock market. Pakistan on the other side has been an extremely high one. And then, of course, there is this strong disdain of foreign investments which don't want to look at Pakistan, but of course the strong and increasing trend line for foreign investors in India has been around. Kranti, we thought it might be a good day to try and put what is wrong with Pakistan's stock markets in perspective today. Help us understand. This has been crashing. Last 2 days, 3 days, we've seen 2,000 points down, 1,500 points down. We will try and bring up data for this morning as well as soon as we can. But what is really wrong? Why is the sentiment on the Pakistani stock exchange just so bearish?
Karthik, first of all, I don't want to draw a comparison between India and Pakistan because both are different tangos, extreme ends. Okay, right. One is a nation, okay, which was in woods. We are much advanced in terms of the technology, in terms of the human skills, human resource development is concerned. We are way above in all the parameters are concerned. Right. Pakistan, of course, they have a stock market. There were some kind of a high risk appetite investors do invest in Pakistan. There is no particular companies, okay, which are making any significant progress in terms of the corporate world is concerned. Right. But I want to draw your attention. Pakistan is struggling in terms of their debt, in terms of their GDP growth is concerned, mounting debt. Okay, they have been in a complete mess in terms of the economy is concerned. So right. They are just trying to survive, trying to get the debt from IMF and all. They are running the country in terms of the economy is concerned. Right. But last year, in the frontline stock exchanges are concerned, that means Pakistan will not categorized under, not even under the emerging markets, not even under the frontier markets are concerned. But the index has done last 1 year 45% positive returns. The stock, the market has risen in the last 1 year. But reason is it has came down to the bottom and because the IMF have funded that country, okay, some kind of positivity what the markets have witnessed. By and large, okay, in terms of the stock markets are concerned, there is no foreign portfolio investors activity, and we are way ahead of the we are in the global peers, and Indian market is one of the largest market economy. Also, we are way ahead. When we have to draw a comparison with Pakistan, they lost the economic development. Their agendas are different. Okay, in terms of the economic development, in terms of the human development is concerned.
Right, absolutely. You're right, Kranti. I mean, there is absolutely no comparison between India and Pakistan, but I think we took this opportunity to compare the two countries simply to help our viewers understand just how stark the difference is for countries which got independent at the same date, technically 14th August and 15th August 1947, have come from the same DNA, have come from the same culture, and it's a stark question on leadership and what leadership can do to make or break an economy, to make or break investor wealth, and to make or break the lives of citizens.
Sorry to interrupt you. Last 25 years, they lost the development and also the technological progress. And India have taken the growth path in the past 30-40 years and past 25 years. The kind of progress we made is quite significant and it is unmatchable. As per India is concerned, of course, if we have to draw any comparison, we need to compare with China, what kind of progress they made, and we try to get into their footprints in terms of the economic development and in terms of the increasing the per capita income is concerned. Right. Pakistan, they lost their agenda, they have a different agenda, and in this bargain, they don't have any leadership also. That's where the key concern for Pakistan.
Absolutely. A fundamentally weak economy, leadership crisis, decade after decade. There is absolutely no hope for the country to work as a real democracy, and that is something which is keeping the army in Pakistan in charge. But specifically on the last few days, maybe the last 2 days or 3 days or so, and that trend continues. And if you bring up the Asian markets chart, we will see that again, that even this morning, the Karachi 100 is down about 1.8% at a time when rest of Asia, including India, is growing. So right now, the developments, of course, you mentioned, Kranti, that the returns over the last 1 year have been fairly handsome, but then, of course, I assume that is a low base effect playing in. But if you look at Asian markets today, the last 2-3 days, the negativity in the Karachi Stock Exchange, primarily because of escalation with India. How fearful do you think investors in Pakistan right now are?
Yeah, definitely. Okay, there is a fear, and also the main fear that is accentuated from the India's abeyance of the Indus Valley Treaty, that's going to have a very long-term impact on the economy, because by and large Pakistan has been a agrarian economy till date. So the dependency on the water is very much high. So the kind of measures India has taken in the last few days, okay, that's going to have a dire impact on the Pakistan economies. That's where the markets are giving the first indications to the economy. So that's where the market has came down. That's the main reason for the fear and jitters in the market for Pakistan.
All right. Well, Kranti Bathini, thank you so much for those inputs. We will leave it at that this morning, but always a pleasure having you here with us on News9.
Thank you, Karthik.
And moving on now, U.S. Treasury Secretary Scott Bessent has said that India is likely to become the first nation to finalize a bilateral trade with Washington, helping it sidestep President Donald Trump's reciprocal tariffs on Indian exports. Now remember, 26% reciprocal tariff on all Indian exports to the United States is currently under the 90-day suspension, which is scheduled to end on July 8th. Meanwhile, India, along with other nations, continues to face a 10% tariff under the prevailing U.S. trade policy. According to the New York Post, while speaking at a media roundtable in Washington, Bessent noted that trade talks with India are, quote-unquote, very close to a successful outcome, citing India's relatively low tariffs, minimal government subsidies, absence of currency manipulation, and fewer non-tariff barriers. Now, President Trump has been pushing nations to dismantle trade restrictions and reduce deficits with India, which accounted for about 3% of US imports as of February and had a $45.7 billion trade surplus with the US in 2024, according to official data. And before we slip into a break, let's look at the global headlines that we're tracking for you this Friday morning. US President Donald Trump yesterday stressed the importance of North Atlantic Treaty Organization or NATO to Europe, but said the alliance would not be as powerful without the United States. Trump also said that he expects to meet with world leaders when he is in Rome for Pope Francis's funeral. He's likely to discuss tariffs and trade deals during that visit. And staying with tariffs, a cowboy hat-making company, Master Hatters of Texas, has hit jackpot with the coming of Donald Trump to the White House. The company that procured its raw material is now sitting on piles of surplus. Well, a rare rebuke towards President Putin. Trump posts that Vladimir stop on his social media platform Truth Social after Russia pounded Kyiv with its biggest attack this year. Meanwhile, US tech stocks rallied for the third straight day on Thursday, with the Dow adding about 1.25%, and the Nasdaq climbing 2.75%. Meanwhile, Japanese Nissan Motor sees a record net loss of $5.26 billion for the financial year that ended in March 2025. The Japanese automaker cited impairment charges of its struggling restructuring measure as the primary reason for these losses. Meanwhile, Unilever beat estimates for first quarter underlying sales growth, held primarily by price increases and a strong demand for its premium products. And South Korean Hyundai Motor is bracing for the impact of Donald Trump's sweeping global tariffs. The South Korean giant said it had set up a task force to handle its response. Swiss chocolate maker Nestle has posted better than expected first quarter organic sales growth of as much as 2.8% for the first quarter of 2025. These stories coming up on the other side. You are watching Morning Brief at 9.
Smash your way to glory at the News9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
Presenting sponsor, Srinidhi University. Kindle the light within. Venue partner, Pulela Gopichand Badminton Academy, Hyderabad.
On my dear cool. ये एयर कंडीशनर नहीं, AI कंडीशनर है.
What, according to you, is buzzing in the world of marketing? What is the big buzz as far as health insurance marketing is concerned?
I think personalization is a very, very big buzz. The only problem is the personalization lasts like the 30-second ad film. It doesn't extend beyond that. If we have to insure the 140 crore citizens of ours, which is very, very important for us, it cannot be a catch-all proposition. And marketing teaches you that you have to come up with interesting proposition, because everybody's reason to not buy health insurance is very different, right? So how do we use and leverage the power of personalization? You don't want to buy health insurance because you think you're young? Okay, here's a proposition for you.
You're watching Morning Brief at 9. Let's bring you all the global stories that we are tracking for you this Friday morning. US President Donald Trump has said that NATO wouldn't nearly be as powerful without the US. He made the statement on Thursday while stressing the importance of NATO to Europe. Listen in.
But I think Norway's always been a great ally. Yeah. Well, it's a very interesting question. It's certainly very important for Europe, and I think without us it wouldn't be as nearly as powerful. And as the former Secretary General, who did a great job, can tell you, I played when I was there a very big role in making sure that NATO is funded by the 28, at that time they had 28 countries including us, because many of the countries weren't paid, and they ended up being paid, you would say, and the Secretary General was very nice about it. Money, and they ended up having a lot of money. After we said, you got to pay up.
All right, and during his meeting at the Oval Office with Norwegian Prime Minister Jonas Gahr Støre on Thursday, President Donald Trump also said that he expects to meet with world leaders when he is in Rome for Pope Francis's funeral, where both leaders talked up the benefits of a trade deal. Pope Francis's funeral is scheduled to take place on Saturday, the 26th of April in the Vatican City. Listen in.
Meetings with other world leaders when you're in Rome?
Yes, I will.
Which leaders do you want to meet, sir? Will you have meetings with other world leaders when you're in Rome?
Yes, I will.
Which leaders do you want to meet, sir?
Well, I'd like to meet them all. That would be nice. I'd like to take care of all of them, but we have many of them there, and they all want to meet. They want to meet about trade. And we are making some great inroads and great deals. You might want to speak about that.
We look after security in the north, in the Arctic, a lot of confidence between our services.
Additionally, we talked about trade, and we will definitely, we get along very well on trade. We'll do something, but I think the Prime Minister knows that over the years the United States has been very good to a lot of people, and it's time for us to benefit also. So we're going to have a good relationship on trade, and we discussed other things also.
Well, thank you, Mr. President. This year is 200 years since the first immigration. Discussed in detail the war in Ukraine. And on trade. We have also emphasized that we can benefit, both of us, by trading. We can be complementary, and we can find good solutions. But first of all, I appreciate, Mr. President, the spirit and the tone of this conversation, which has been confirmation of a very strong partnership.
Thank you very much. Appreciate it.
Have you spoken about...
And Russia has pounded Kyiv with missiles and drone strikes, killing at least 12 people in the biggest attack on the Ukrainian capital this calendar year. Meanwhile, US President Donald Trump took on President Vladimir Putin in a rare rebuke on his social media platform, Truth Social, telling Putin to stop. Here is a detailed report.
Rescue workers found a man alive in the rubble in Kyiv after Russia hit the Ukrainian capital overnight. At least 12 people were killed in the missile and drone strikes, and at least 90 were wounded in the biggest attack there this year. Anxious friends and relatives of those missing stood near destroyed buildings hoping for good news. The violence led to a rare rebuke from U.S. President Donald Trump, who told Russian President Vladimir Putin on Truth Social, quote, "Vladimir, stop." Trump was asked about his message to Putin during a meeting with Norway's Prime Minister in the Oval Office.
What is your level of frustration with President Putin?
I didn't like last night. I wasn't happy with it. And we're in the midst of talking peace, and missiles were fired. And I was not happy with it. That's what I meant.
Why are you not putting more pressure on Russia? I know a lot of Europeans...
Putting a lot of pressure. You don't know what pressure I'm putting on Russia. They're dealing. You have no idea what pressure I'm putting on Russia. We're putting a lot of pressure.
Can you maybe tell us that?
We're putting a lot of pressure on Russia, and Russia knows that, and some people that are close to it know, or he wouldn't be talking right now.
What concessions has Russia offered up thus far to get to the point where you're closer to peace?
Stopping the war, taking the whole country. Pretty big concession.
Trump said he still believed both sides wanted to make a deal to end the war begun by Russia in 2022. But the White House has also threatened to abandon its efforts at peace talks if no progress is made soon. On Wednesday, Trump slammed Ukrainian President Volodymyr Zelensky over a comment in which Zelensky repeated that Kyiv would not recognize Russia's occupation of Crimea. Zelensky, who cut short his trip to South Africa after the Russian attack, said he did not see signs Washington was putting strong pressure on Russia. Ukraine's foreign minister said on X that the brutal strike showed that Russia, not Ukraine, was the obstacle to peace, a viewpoint shared by EU Foreign Policy Chief Kaja Kallas during her visit to Moldova.
It is clear that we want peace. Moldovans want peace, Ukrainians want peace, Europeans want peace. But the reality is that Putin is escalating the attacks, and it's making it clear that he doesn't want peace. It takes two to want peace. It only takes one to want war. We have to keep supporting Ukraine, that they are able to defend themselves.
Talks did take place between the U.S., Ukrainian, and European officials in London this week, and Zelensky said on Thursday that the meeting with a U.S. representative had not been easy, but that it had been constructive. A U.S. official said Trump's special envoy is expected to meet Putin on Friday for more talks.
All right, and moving on now. Wall Street continued its bull run for the third day in a row, with all three major indices closing in the green on Thursday. The solid boost came largely from tech stocks on the Nasdaq, with the big three of the Magnificent Seven, Nvidia, Microsoft and Tesla, all closing well above 3% in the green. Here's a report.
U.S. stocks rallied for a third straight day on Thursday, with the Dow adding about 1.25%, the S&P 500 gaining 2%, and the Nasdaq climbing 2.75%. Beijing called for cancellation of U.S. tariffs on Chinese goods, following comments from U.S. Treasury Secretary Scott Bessent, signaling the White House could be willing to de-escalate trade tensions that have whipsawed markets for weeks. Rob Slimer, technical strategist at RBC Wealth Management, said stocks may be catching some upward momentum.
Well, the interesting thing is if you look at the average path of the S&P 500 during the first year of a new administration, like we have, the first quarter tends to be volatile. And this quarter has certainly been, or the first quarter was certainly very volatile. And then you tend to get a rebound in the second quarter. And again, the technical backdrop sets up to support that view. A lot of uncertainty, a lot of de-risking, a lot of relatively negative news on tariffs and policy. And now you're starting to see that dialed back. Stocks are starting to rebound. They're coming out of their first quarter earnings in the second quarter. And I think there's still more potential for upside looking into early Q3.
All of the Magnificent Seven mega-cap technology stocks rose, getting a boost from software firm ServiceNow's better-than-expected quarterly results, which sent its shares up more than 15%. They included Google parent Alphabet, which closed up more than 2% and climbed in extended trading after it beat first-quarter profit and revenue estimates and said it would buy back $70 billion worth of shares. On the flip side, shares of Intel, up more than 4% at the close, plummeted in extended trading after the company forecast second-quarter revenue below Wall Street estimates, casting a shadow over new CEO Lip-Bu Tan's first round of earnings. Meanwhile, President Trump's shifting tariff policy prompted corporate giants Procter & Gamble, PepsiCo, and American Airlines to cut or withdraw their forecasts due to elevated uncertainty among consumers. P&G and Pepsi closed lower on Thursday.
And from the Wall Street, let's move to Japanese automaker Nissan, which has warned investors of its biggest ever loss for the financial year that ended March 2025. It sees a net loss of $5.26 billion, far higher than the previous forecast loss of $560 million. It blamed impairment charges as the struggling auto restructuring measures. The car maker booked impairments of more than $3.5 billion in North America, Latin America, Europe and Japan. Here's more.
Nissan warned of its biggest ever loss on Thursday. The Japanese automaker said it sees a net loss of up to $5.26 billion for the financial year that ended in March. It's far higher than a previous forecast of $560 million. It blamed impairment charges as the struggling automaker restructures. The carmaker booked impairments of more than $3.5 billion in North America, Latin America, Europe and Japan. That after reviewing production assets with additional restructuring costs to total more than $421 million. It comes as new CEO Ivan Espinosa tries to turn the auto giant around. Nissan is cutting jobs, reducing capacity and closing plants to save money. It also ended merger talks with Honda to build a $60 billion car company in February. Sources said the deal fell apart due to Honda's proposal to make Nissan a subsidiary. Nissan said it sees a full-year operating profit of just under $600 million, around 30% lower than its previous forecast. The automaker is due to report its earnings in mid-May.
Meanwhile, South Korean auto major Hyundai Motor is bracing for the impact of Donald Trump's sweeping global tariffs by setting up a task force to handle its own response. Trump has imposed 25% duty on imported cars, with levies on parts also to kick in soon. Here's more.
Hyundai Motor is bracing for the impact of Donald Trump's sweeping global tariffs.
The South Korean giant said Thursday it had set up a task force to handle its response. Together with affiliate Kia, it's the world's number 3 automaker, and it could be particularly vulnerable to a trade war. Hyundai and Kia make about 1/3 of their global sales in the US, and they import about 2/3 of the cars they sell there. In a statement Thursday, the company called the outlook challenging. The comments came as its earnings numbers met forecasts. Operating profit hit $2.5 billion over the January to March quarter. Income was hit by increased sales incentives in the US and Europe and lower sales of high-margin SUVs. But that was offset by weakness for the South Korean won currency, which increased the value of earnings made overseas. Hyundai now intends to ramp up production at its new plant in the US state of Georgia. But that will take time, and tariffs could still cost it billions. Trump has imposed 25% duties on imported cars, with levies on parts also soon to kick in. Hyundai has said it will try to keep sticker prices unchanged in the US until June, and then manage prices flexibly thereafter. Its shares dropped around 0.5% following Thursday's outlook, broadly in line with the wider market.
And before we slip into the end of this show, well, the Indian markets have had a choppy session again. Remember, markets started in the green. The Sensex and Nifty were up about 0.3%. Sensex had touched the 80,000 figure in trade first 5-7 minutes of trading. But as the minutes are progressing, there is some pressure on the Indian markets now in the red. Sensex is now down almost 500 points from the day's high. That's the kind of range that we are seeing, and as expected, volatility is up at about 1.63% or so. Nifty 50 meanwhile had started the day at about 24,337 levels, if I remember correctly. It is now down to about 24,149 levels. Pressure also building up on the mid-cap and small-cap space, with the small-cap sector taking a big beating of more than 2%. Now the small-cap 100 is at about 16,600 odd levels. We'll quickly also pull up the Nifty 50 heat map and show you how it has changed from basically a sea of green and grey in the morning to now more reds popping up. Remember, the IT sector had started with solid gains this morning, but we are seeing massive profit booking taking place with TCS and Infosys, which were around 2% up in the morning, now up just 1% and 0.5% respectively. Meanwhile, Wipro and Tech Mahindra have taken a negative turn. Wipro is down about 0.8% or so. The pressure on the banking side also building up. SBI now down more than 1%. Kotak Mahindra down almost a percentage point, but the biggest blow coming from Axis Bank, which is down about 3.4% or so. Meanwhile, look at the auto story. M&M, Bajaj Auto, Tata Motors all down. Similar pressure coming from the health space as well. Sun Pharma is down. Utilities and oil companies also under pressure right now. Coal India is down about 1.3%. ONGC down about a percentage point or so. Well, we will keep tracking markets for you and bring you in case there is any major movement during the day. Well, with that, it is a wrap right here on Morning Brief at 9. Thank you so much for joining us. But stay tuned to News9 as news and updates continue right here.
I need expert performance. I need my carrier.
News9 Corporate Badminton Championships, in collaboration with Pullela Gopichand Badminton Foundation, is here for all of you to experience the passion,